The journey begins, Jackson Hole, July 2022. The FPAS Mark II journey began in Jackson Hole in July 2022, where Governor Rhee from the Central Bank of Korea, alongside Doug Laxton, presented a paper titled Lessons from Unconventional Monetary Policy for Small Open Economies and Emerging Markets. This presentation was pivotal in introducing the initial ideas that would later evolve into the FPAS Mark II framework. However, the specifics of the framework were not fully developed in this paper. Instead, it provided the groundwork for what would become a comprehensive approach to monetary policy. One of the key themes they explored was the unintended consequences of unconventional monetary policies, which have been widely used by advanced economies since the global financial crisis. These policies, while stabilizing in the short term, have led to significant long-term challenges, including asset price bubbles, large buildups of debt, and substantial expansions of central bank balance sheets. These developments pose significant risks, particularly for small, open economies and emerging markets, which are more vulnerable to external shocks. Scenarios-based forward guidance, a closer look. The paper by Governor Rhee and Doug Laxton laid out the foundational concepts, including the importance of considering scenarios-based forward guidance, which combines quantitative scenarios with qualitative assessments. These initial ideas were essential but required further development and refinement. Over time, this approach became a cornerstone of the FPAS Mark II framework, quantitative forward guidance. This involves the use of quantitative scenarios to illustrate potential future paths for the economy. In the context of FPAS Mark II, Case A scenarios represent situations where inflationary pressures necessitate a higher policy rate path than what is currently priced into financial markets. Conversely, Case B scenarios represent situations where inflationary pressures might be lower, potentially requiring a lower policy rate path. Qualitative forward guidance. Beyond the numbers, qualitative forward guidance involves the policymaker's assessment of the likelihood of these various scenarios. This qualitative judgment allows central banks to communicate more effectively about the uncertainties they face and the rationale behind their policy decisions. Development of the framework, October 2022, January 2024. The specifics of the FPAS Mark II framework were further developed and refined through a collaborative process that began in October 2022 when Governor Galstian from the Central Bank of Armenia presented additional ideas at the IMF. From that point onward, the framework underwent significant evolution, shaped by continuous feedback and rigorous analysis. Throughout this period, weekly seminars were held where central bank experts with a long history of developing the first generation of forecasting and policy analysis systems, along with other stakeholders, discussed the issues in depth. This collaborative process also involved valuable feedback from Larry Summers and other experts, which was instrumental in refining the prudent risk management approach. By January 2024, after this extensive period of development, the Central Bank of Armenia officially launched the prudent risk management approach. This framework is now recognized as a robust tool for managing the uncertainties that central banks face, particularly in emerging markets, the importance of uncertainty and the neutral interest rate. A central theme in the FPAS Mark II framework is the role of uncertainty, particularly concerning the neutral interest rate, a critical component in monetary policy decisions. At the Global Forecasting School, we have been deeply engaged in analyzing how shifts in the neutral rate can significantly influence policy outcomes. Maurice Obstfeld's recent presentation, which can be found on the Better Policy Project YouTube channel, highlighted the need to take a global perspective on the equilibrium real rate, especially in an integrated world of capital markets. For example, if the neutral rate in the United States is higher than initially estimated, say closer to 4% rather than the Fed's earlier assumption of 2.5%, this has profound implications. A higher than expected neutral rate could mean that central banks, not just in the U.S., but globally, risk falling behind the curve if they underestimate this key parameter. This is particularly crucial for emerging markets like Georgia, where inflation expectations are more vulnerable to global economic shifts. Larry Summers was one of the first to raise concerns about the neutral rate potentially being as high as 4%, and more recent trends show that the neutral rate, as projected by market indicators like the Atlanta Fed's funds tracker, has decreased. Currently, the expected path for the Fed funds rate by the end of 2026 is around 3.2%, which remains significantly higher than the median estimate from the Fed's dot plot, which stands at 2.8%. This ongoing adjustment highlights the persistent uncertainty surrounding the neutral rate and underscores the importance of scenario-based analysis in policy deliberation. In my work at the Global Forecasting School, I've been applying the FPAS Mark II framework to analyze the implications of this uncertainty for U.S. monetary policy. By exploring Case A and Case B scenarios, we can better understand the risks and develop strategies to mitigate them, ensuring that monetary policy remains effective even in uncertain times. Broader applications across countries. The application of FPAS Mark II is not limited to a single country. Other students at the Global Forecasting School are applying the prudent risk management approach to a wide range of countries, including the United Kingdom, New Zealand, the Euro area, and many others. This widespread application demonstrates the framework's versatility and relevance across different economic contexts. Each application helps refine the framework, ensuring it is robust and adaptable to the unique challenges faced by various central banks. Launching the Prudent Risk Management Approach, January 2024. By January 2024, the Central Bank of Armenia officially launched the Prudent Risk Management Approach, marking a significant milestone in the FPAS Mark II journey. This framework, which emphasizes managing uncertainties, is particularly critical for countries with higher exposure to external shocks. The experience of the Central Bank of Armenia serves as a valuable case study, offering insights into the practical implementation of FPAS Mark II. Symposium Review, January 2024. The Central Bank of Armenia's symposium in January 2024 was a significant event in the ongoing development of the FPAS Mark II framework. The symposium had participants from over 100 countries, demonstrating the global interest in refining and implementing this approach. A highlight of the event was a presentation by Don Coletti from the Bank of Canada, who is a research advisor leading a 3-year plan to develop a better framework for addressing uncertainty in monetary policy. His work exemplifies how central banks are proactively improving their frameworks to better handle the complexities of today's economic environment. The symposium also featured discussions on the unintended consequences of unconventional monetary policies, such as asset price bubbles, large buildups of debt, and significant expansions of central bank balance sheets. These issues are of particular concern for small open economies and emerging markets, where the spillover effects from advanced economies' policies can be profound and destabilizing. In addition to these discussions, the symposium also featured contributions from prominent economists such as Larry Summers, Athanasios Orphanides, Charles Goodhart, and experts in communications like Jory from Money and Macro, Robert Ford, Ioannis Halikias, and Hamid Faruqi, all of whom serve as advisors at the Better Policy Project. These experts provided critical input, helping to shape the future direction of FPAS Mark II and ensuring that it remains relevant to both advanced and emerging market economies. Larry Summers, in particular, offered further feedback on how central banks might have benefited from adopting the prudent risk management approach earlier, using counterfactual analysis to explore how different monetary policy paths could have mitigated some of the challenges faced during recent economic crises. This kind of analysis underscores the importance of developing and implementing robust frameworks like FPAS Mark II, advancing inflation measurement. Another critical area of work at the Global Forecasting School is the development of better measures of inflation, particularly focusing on non-traded sticky price inflation. This builds on the work of the Atlanta Fed, which developed measures of sticky price inflation, a concept that helps central banks understand persistent inflationary pressures better than traditional core inflation measures. Our colleagues at the Global Forecasting School are refining these measures, arguing in recent working papers published by the Central Bank of Armenia and the National Bank of Georgia that non-traded sticky price inflation provides a more accurate picture of inflation dynamics. unlike traditional core inflation, which often excludes volatile items based on statistical criteria, non-traded sticky price inflation focuses on prices that are typically slow to adjust. This approach offers a more nuanced view of inflation, particularly in understanding how inflationary pressures persist in an economy, and it helps central banks in their policy deliberations. This work is crucial because it not only improves how central banks understand inflation, but also enhances their ability to communicate these complexities to financial markets. By preparing markets for different possible outcomes, central banks can help ensure smoother adjustments to policy changes, thereby reducing the risk of market disruptions. Upcoming Symposium January 2025. Looking ahead, the FPAS Mark II journey will continue at the upcoming symposium on January 23-24, 2025 at the Deletion Training and Research Center. This symposium marks the second year of implementing the prudent risk management approach at the Central Bank of Armenia. Last year's symposium was a significant milestone, with participants from over 100 countries, including many emerging markets and lower-income countries. These nations are particularly interested in the prudent risk management